The US and China are at a Mexican standoff at present. Mr. Trump knows that he doesn't hold all the cards, and yet President Xi Jinping is aware that the US is still a formidable power. The US is still the largest economy in the world with a GDP of 27.7 trillion US dollars, and note that the GDP per capita is very substantial, 82,700 USD per person, according to the World Bank, with a median individual income of around 40,000 US dollars. This outguns China with GDP of 17.8 trillion and 12,600 US dollars per capita. However, when we look at the recent figures for trade, China exports $3.6 trillion of goods and services and imports 2.7 trillion, giving a positive trade balance of 0.9. It is the largest trading partner to over 120 nations. In comparison, the US has exports of 2.1 trillion and imports 3.4 trillion, giving a negative trade balance of 1.3 trillion. Its largest trading partners are Mexico, Canada, China, Germany, Japan, in that order. Now, unlike a game of poker, each side knows which cards the other side holds, and thus China is unwilling to back down. It is standing firm because it knows its hand is pretty decent. The markets are guessing what Mr. Trump's next moves are. His recent softer tone on tariffs has boosted valuation slightly, but anything can happen. I don't think Mr. Trump is the kind of man to go down without a fight, and no doubt the Trump administration is going to cause more uncertainty in the markets. And that is why I'm holding on to some cash still and waiting later for a time to risk on. Yes, I still think markets can return to form. The fundamentals support it, with Q1 2025 seeing a blended year-on-year earnings growth rate for the S&P 500 of 7.2%. This is the seventh straight quarter year-on-year earnings growth reported by the index, and 71% of S&P 500 companies have reported a positive EPS surprise, and 61% have reported a positive revenue surprise. Now, it is true that corporate earnings is a lagging indicator, so we'll see if this is sustainable or whether we'll see a dip in Q2. We can also look at PMI as a leading indicator of the wider economy, and all months in Q1 2025 were above 50 points, suggesting a potential economic expansion. But as I've said many times, quantitative analysis alone doesn't show the full picture. Investor sentiment is crucial, and right now we're seeing massive outflows from US equity. The US dollar has been weakening all year, and investors are piling their cash into safe haven assets. We've seen the price of gold surging and almost doubling these last couple of years for multiple reasons, and investors are losing confidence and waiting for the dust to settle. But I think there is an appetite to re-enter once investors have more certainty about the Trump administration's policies going forwards. We all have a rough idea of what he's trying to do, but we'll see if he has to pivot from his original plans. It has been a wild ride, and I don't think the ride is over. So hold on to your cash, get it ready. I think a returning bull could be coming.